Okay, now I've been getting a lot of questions around what strategy should I use? Now, a lot of traders don't realize that you should be focusing on the trends. If an instrument is trending up or trending down, then there's specific strategies you should use. Now, let me give you an example. An instrument that is trending down, right? You've got to be thinking, I am a seller, right? Unless there's some key event from the central bank or inflation number, the trend will remain in place. So if I see a downtrend, the first strategy I will consider is a range trade, where the price action retraces back towards resistance. You're looking to get into the trade below that resistance trend line. Your stop loss is above the market and your take profit is below. We're expecting it to touch the trend line and then drift lower. Secondly, the false break trade. Okay, maybe it's got a lot more momentum than we otherwise thought. So placing the range trade may not be the go. In this situation, we have a false break trigger above the resistance line. This is where stop losses are triggered. They are taken out of the market. We get back into the trade below the previous resistance line, and our take profit is below the market and our stop loss back above the market. Now, the third strategy, selling on weak economic data. You're just looking to sell at market and take advantage of the fresh momentum and direction from the weak economic data. Stop loss is above the market and your take profit is below the market. Now, the fourth strategy, a break trade. Looking for a break of the support trend line, looking to get in the market below that support trend line. Your stop loss is above the market and your take profit is below the market. Okay, so these are your strategies for a downtrend. The range trade, you're selling on a rally. A false break trigger, you're actually selling but letting the market go above the resistance trend line first and then selling when it gets back into the range. Selling at market on weak economic numbers or selling on a break of the support trend line. These are your four key strategies for a downtrend. Okay, and for an uptrend, it's just the opposite. Okay, a range trade looking to buy on a dip towards support. The false break trade, okay, looking for a break of support and then seeing it snap back into the range. Buying at market on strong economic numbers or buying on a break of resistance. Now, where this gets interesting and a lot better is when you have a combination. And what I'm talking about is the release of economic numbers. So, for instance, we get weak economic numbers. You could be selling, and then also that combines with a break of the support trend line. This is like a double whammy and a surefire winner. So when it comes to choosing your strategy, don't overcomplicate things. Look for your trend. The trend is your friend. And when you understand that, and when you know what the trend is, you'll know whether you're a seller or a buyer and what strategy to use. Good luck and happy trading.